Stop looking at the price chart. Look at the factory floor. I have a report here that proves silver is no longer just money. It is the new oil of the 21st century. The AI revolution just triggered a 5,252% spike in power demand since the year 2000. 5,252%. And there is only one metal that can handle it: silver. The tech giants know it. They aren't buying ETF shares. They aren't trading futures. They are buying the mines. Samsung just paid $7 million to restart a silver mine in Mexico and locked up 100% of its output for 2 years, before a single ounce was dug from the ground. Tesla allegedly purchased 85 million ounces of physical silver in a single off-market transaction. That's more than the entire registered stock at COMEX. Apple has internal contingency plans authorizing silver purchases at $573 per ounce, just to ensure supply chain continuity. $573 per ounce. Not for profit, for survival. Because without silver, the AI revolution stops. Every ChatGPT query runs through silver-laced circuitry. Every autonomous vehicle decision depends on silver contacts. Every data center burns down without silver thermal management. This isn't jewelry demand. This is an investment demand. This is survival demand. And by the end of this video, I will prove to you why the COMEX price of $75 is a lie and why the real price is being paid behind closed doors, directly to the miners, bypassing the exchanges entirely. I'm going to show you the 5,252% AI power capacity growth and what it means for silver demand. I'm going to show you Samsung's mining lockup, Tesla's ghost purchase, and Apple's $573 contingency. I'm going to show you why solar is now consuming nearly 30% of industrial silver, and why the new Topkin and HJT technologies require 50% more silver per panel, not less. I'm going to show you why the US government just designated silver a critical mineral for the first time in history, and why every Tomahawk missile contains 500 ounces of it. And I'm going to show you the impossible triangle: why mine supply is locked, recycling is capped, and demand is inelastic, making a price explosion inevitable. But first, I need to know who understands the future. Are you holding silver for the monetary collapse or the tech explosion? Pause this video right now. Go to the comments and type money or tech. I want to see if this community sees the industrial reality. Comment now, because what I'm about to show you is not a financial thesis. It's a materials science crisis, and it's happening right now. Let me show you the numbers. The exact numbers. Not estimates. Not projections. Historical fact. Global data center power capacity has grown 5,252% since the year 2000. That's confirmed. That's documented. That's the single most explosive growth rate of any industrial power consumer in modern history. In 2024, global data centers consumed approximately 415 terawatt-hours of electricity. That's 1.5% of total global electricity consumption. In the United States alone, data centers consumed 183 terawatt-hours. That's more than 4% of national electricity consumption. That's comparable to the annual energy demand of all of Pakistan. By 2026, right now, data centers are projected to consume over 500 terawatt-hours globally. That's 2% of global electricity. By 2028, the U.S. Department of Energy projects AI could push data center electricity share to 12% of the U.S. energy mix. 12%. In 2 years, an average large AI data center consumes as much electricity as 100,000 households. The largest facilities under construction may require 20 times more. $580 billion was spent globally on AI-focused data center infrastructure in 2025 alone. The installed capacity of newly built data centers in North America reached 6,350 megawatts by end of 2024, more than double the prior year. Now here's why this matters for silver. Silver is the highest electrically conductive metal on Earth. Period. No exceptions. Copper is second, gold is third, but silver is first. And at the nanoscale, where every fraction of resistance generates heat and wastes power, silver's conductivity is irreplaceable. Let me show you where silver goes in AI infrastructure. High-performance chips and semiconductors. Silver is used in die-attach compounds, wire bonding, and conductive pastes inside advanced AI processors. GPUs, TPUs, ASICs. Global semiconductor packaging alone consumes 1,200 to 1,500 tons of silver annually. That's 37 to 47 million ounces. Power connectors and bus bars. AI server racks draw enormous current. Silver-plated bus bars, connectors, and contact points minimize resistive losses and heat generation. When downtime costs $300,000 per hour, no data center operator will risk copper's 6% conductivity gap. Thermal management. Silver has the highest thermal conductivity of any metal, critical for dissipating heat from AI chips running at maximum load 24/7. EMI shielding. Dense AI server farms require electromagnetic interference shielding. Silver-based Faraday cages and conductive coatings protect sensitive AI computations from signal degradation. Now here's the kicker. Each AI-optimized server uses approximately 180 grams of silver. A traditional server uses 60 grams. AI servers require 3 times more silver than conventional servers. Goldman Sachs estimates data center power demand will grow 165% by 2030. If 50 gigawatts of new AI capacity deploys by 2028, which is conservative, that creates an incremental 67.5 million ounces of new silver demand. 67.5 million ounces. From AI data centers alone. At $50 per ounce, that's $3.375 billion. At $100 per ounce, that's $6.75 billion. At current prices after the correction, it's still over $5 billion in new structural demand that didn't exist 3 years ago. And this doesn't include EVs, doesn't include 5G, doesn't include solar, doesn't include defense. This is just AI. AI chips melt without silver. Data centers burn down without silver. The entire digital economy, the thing everyone says is replacing the physical economy, is 100% dependent on a physical metal that's in structural deficit for the 6th consecutive year. Without silver, the AI revolution stops. And the tech giants know it. Which brings us to what they're doing about it. October 2025, Samsung C&T, one of Samsung Group's parent entities, finalized a mining prepayment deal with Canada's Silverstorm Mining to restart the La Paria silver mine in Mexico. Samsung provided a $7 million prepay offtake facility. 6,000 meters of underground drilling kicked off in mid-January 2026. Now here's the clause that shook the industry. Listen carefully. As consideration, Samsung obtains the exclusive right to purchase 100% of the mine's silver lead concentrate output for the next 2 years. 100%. For 2 years. This is not market-based procurement. This is resource lockup. Samsung did not go to COMEX to buy paper silver. It didn't call a dealer. It didn't trade futures. It paid cash to restart an entire mine. And then it locked in 100% of its output before a single ounce was dug from the ground. Why? Because Samsung's next-generation solid-state battery technology relies on a silver-carbon composite anode layer. Silver in this application is non-substitutable. Once solid-state batteries enter mass production, and they will, Samsung's silver demand will grow exponentially. Separately, Samsung secured a $16.5 billion chip manufacturing contract with Tesla in mid-2025, deepening the silver supply chain entanglement between these two giants. Now let's talk about Tesla. In mid-January 2026, reports surfaced that Tesla launched a one-off purchase of 85 million ounces of physical silver. 85 million ounces, more than the entire registered stock at COMEX at the time. This transaction was reportedly assembled through a combination of mine contracts, vault purchases, and private deals, without touching any public exchange. 85 million ounces at approximately $100 per ounce equals approximately $8.5 billion in a single off-market silver purchase. Why would Tesla do this? Because Tesla vehicles use silver in their battery management systems, in their electric motors, in their autonomous driving sensors, in their charging infrastructure. And if Tesla can't get silver, Tesla can't build cars. So they bypassed the market. They went straight to the source. Now let's talk about Apple. A purported internal procurement scenario from Apple surfaced indicating that under extreme supply disruption assumptions, the company would be prepared to authorize silver purchase prices as high as $573 per ounce for long-term supply contracts. $573 per ounce, purely to ensure supply chain continuity. The math checks out. Apple sells approximately 230 million iPhones annually. Each iPhone contains approximately 0.3 grams of silver. A factory shutdown from silver shortage would cost billions in lost revenue. At $573 per ounce, silver is still cheaper than stopping the production line. Think about that. $573 is huge for you. But for Apple, it adds less than $2 to the cost of an iPhone. They can afford $500 silver. Can you afford to wait until it gets there? Rumors are now widespread that Apple and Samsung are evaluating direct long-term supply agreements with silver mines in Latin America to cut reliance on exchange stocks entirely. Do you see the pattern? The tech giants have abandoned the COMEX playbook. They're going straight to the mines, paying premiums, locking up entire operations for years. Why is Samsung acting like a mining company? Because they can't trust the market to deliver. Why is Tesla buying more silver than COMEX has in its vaults? Because paper promises don't build batteries. Why is Apple modeling purchases at $573 per ounce? Because the alternative is shutting down iPhone production. This metal has been permanently removed from the global tradable supply. When Samsung restarts a mine just to hoard every ounce, you are watching survival mode, procurement, in real time. This is why the spot price is fake. The real deals are happening off the books, and the tech giants will pay any price to keep the assembly lines running. Now let me show you the other industrial black hole that's consuming silver faster than anyone predicted. In 2024, the solar industry consumed approximately 200 million ounces of silver. That helped push total industrial silver demand to a record 680.5 million ounces. Solar silver consumption has undergone a structural shift, from just 11% of industrial silver usage in 2014 to nearly 29% of all industrial demand today. In terms of total silver demand, including investment, solar PV accounted for approximately 17% in 2024, up from 5.6% in 2015. That's an annualized growth rate of 12.6%. For 2026, the Silver Institute's baseline projection is approximately 195.7 million ounces for solar PV. But here's the trap. Here's the paradox that terrifies the solar industry. The industry is simultaneously shifting from older PERC cells to next-generation Topkin, tunnel oxide passivated contact, and HJT, heterojunction, architectures. These new cells are more efficient. 24% to 26% conversion versus 22% to 23% for PERC. But they require silver contacts on both the front and rear sides of the cell rather than just one. Silver intensity increase, approximately 50% more silver per watt. Topkin and HJT cells use approximately 120 milligrams of silver per watt versus 100 milligrams per watt for PERC. This pulls in the opposite direction of all thrifting efforts. Topkin overtook PERC as the dominant cell architecture in 2024 per the German Mechanical Engineering Industry Association. The technology transition is accelerating silver consumption even as manufacturers try to reduce it. A peer-reviewed study in Resources, Conservation and Recycling forecasts that by 2030, the solar industry alone could require 321 to 450 million ounces of silver annually. That would represent roughly 39% to 55% of current global mine production consumed by a single industry. Even the more conservative Silver Institute projection of approximately 195.7 million ounces for 2025 represents nearly 24% of global mine output consumed by solar alone. We focused on AI, but solar is eating 30% of the pie. Codelco is down, supply dead for 5 years. Solar is up, demand explosion with higher intensity cells. The math is impossible, and it gets worse, because there's one more consumer nobody talks about. The biggest consumer of all, defense. On November 6, 2025, the U.S. Department of the Interior officially added silver to the USGS 2025 list of critical minerals. The first time in history silver has been recognized as a critical mineral by the United States. The Energy Act of 2020 defines critical minerals as those essential to the economic or national security of the U.S. with a supply chain vulnerable to disruption. This designation legally mandates government focus on securing domestic supply chains through enhanced permitting, subsidies, and strategic stockpiling initiatives. The U.S. imported over 64% of its silver consumption in 2024, with significant refining capacity concentrated in China, creating acute geopolitical vulnerability. Now let me show you why they care. Why the Pentagon designated it critical. Silver is woven into the DNA of modern weapons systems. A single U.S. Tomahawk cruise missile contains approximately 15 kilograms of silver. That's 500 troy ounces. In its radar seeker, navigation electronics, and thermal battery systems. 500 ounces per missile. Military drones and UAVs. Silver is used in flight controllers, avionics, EMI shielding, optical sensor coatings for IR and night vision, and high-current power connectors. Each high-end military drone contains several kilograms of silver. Satellites and space systems. Silver zinc batteries have powered military satellites since Sputnik in 1957. Silver-coated mirrors and optical systems enable long-range surveillance and targeting. Hypersonic weapons. Silver's combined electrical and thermal conductivity is critical for managing extreme heat and electromagnetic loads at Mach 5+ speeds. Historical precedent. In 1942 to 1944, the U.S. government borrowed 14,700 tons of silver, 430 million ounces, from Treasury reserves to build electromagnetic coils for uranium enrichment during the Manhattan Project. That was over 10 times the annual global production at the time. Defense consumption is largely hidden. Governments do not disclose silver consumption for national security reasons. Some experts speculate military silver demand, if fully accounted for, could dwarf other sectors. One estimate suggests defense may consume up to 15 times more silver than civilian industry averages when all classified uses are included. Silver is now officially a critical mineral of the United States. Every Tomahawk missile needs it. Every Reaper drone needs it. Every spy satellite needs it. They need it for war, not just iPhones. And the Pentagon doesn't negotiate on price. They pay whatever it takes. So let me summarize what we've covered. AI data centers, 5,252% power capacity growth, creating 67.5 million ounces of new structural demand. Tech giants, Samsung restarting mines, Tesla buying 85 million ounces off market, Apple modeling $573 per ounce contingency pricing. Solar, consuming 29% of industrial demand, with new cell technologies requiring 50% more silver per watt. Defense, 500 ounces per Tomahawk missile, critical mineral designation, Pentagon buying at any price. Now let me show you why the supply can't respond. Why this is an extinction event for available inventory. The silver market in 2026 faces what analysts call the impossible triangle. Corner 1. Mine supply is locked. Silver production peaked in 2016 at 900.1 million ounces. It's now down approximately 7% to 819.7 million ounces. Average ore grades have declined 30% to 36% over the past decade. 70% to 80% of silver comes as a byproduct of copper, lead, and zinc mining. It cannot respond to silver price signals. Development cycles for new mines take 7 to 10 years from discovery to production. Codelco's El Teniente, the world's largest underground copper mine, is frozen at 75% capacity for 5 years following the fatal collapse. Mine supply cannot increase. It's locked. Corner 2. Recycled supply is capped. Recycled silver contributes approximately 190 million ounces per year, about 20% of total supply. Silver content per unit in electronics and solar is too small to recover profitably even at $100 per ounce. You can't economically extract 0.3 grams of silver from a phone that costs $1,000. Recycling supply cannot scale. It's capped. Corner 3. Core industrial demand is inelastic. Solar manufacturers will pay any price because the alternative is shutting down panel production. EV manufacturers will pay any price because silver is 0.1% of the vehicle cost, but 100% necessary for the battery system to work. AI data centers will pay any price because downtime costs $300,000 per hour. The Pentagon will pay any price because silver is in every weapon system and national security doesn't have a budget constraint. Demand cannot be destroyed by price increases. It's inelastic. The result? Price increases cannot quickly rebalance the market. The only mechanism left is to drain above-ground inventories until they are exhausted, forcing prices to levels that trigger genuine demand destruction. But what price causes Apple to stop making iPhones? What price causes the Pentagon to ground Tomahawk missiles? What price causes Tesla to stop building EVs? Nobody knows, because we've never been there before. New demand being created by 2028, AI data centers, plus 67.5 million ounces. EVs, plus 25 to 28 million ounces. 5G and IoT, plus 15 to 20 million ounces. Medical and healthcare, plus 3 to 4 million ounces. Total, plus 110 to 120 million ounces of new demand. Even if all optimization and thrifting targets are met, saving approximately 69 million ounces, the net gap is 40 to 50 million ounces of additional structural deficit annually. And that's on top of the 800 million ounces already consumed from above-ground stockpiles over the past 5 years. Meanwhile, COMEX registered inventory dropped below 100 million ounces on February 11, 2026. It's now at 98.138 million ounces. The paper-to-physical ratio stands near 356 to 1. For every ounce of physical silver in the world, there are 356 paper ounces outstanding. Shanghai silver trades at a $10 premium over Western spot prices. Silver lease rates spiked to 35% per annum, indicating extreme physical tightness. The COMEX paper market is a mirage. The real price of silver is being set in Shanghai, in private deals between Samsung and Mexican miners, in Tesla's $8.5 billion vault purchases. Now let me ask you the final question. If silver is the new oil for AI and green energy, do you think the government will eventually classify it as a strategic defense asset and ban exports? Type yes or no in the comments right now, because that's the end game. That's where this is headed. The banks want it for wealth. The tech giants need it for survival. My final question is, when Apple and Tesla start fighting for the last ounce, what happens to the price? Give me your price prediction for 2026 below. Because the AI panic has begun. The supply is gone. The vaults are drained. The mines are locked. The tech giants are bypassing the market. And the Pentagon just declared it a critical mineral. Silver is no longer precious metal number 2. It is the new oil of the AI and green economy. The tech giants know it. Samsung is restarting mines. Tesla bought more silver than COMEX has in its vaults. Apple is modeling purchases at $573 per ounce. The Pentagon designated it critical. Solar is consuming 30% of industrial supply, and COMEX has 356 paper ounces for every physical ounce in existence. The supply shock is not coming. It is here. The only question left, when does the rest of the world figure it out? This is John A.G. Live. We don't just track the money. We track the future. Now you know.